is Thursday, June 12th, the day before Friday the 13th, just in case anyone is keeping track. I thought I'd start today with this simple guide to health insurance and the subsidies. Douglas Eakin-Holtz made a presentation in Washington to a group about the complexities of the advanced premium tax credit and the cost share reductions, and he put together this chart that I think can only be described as some described, a monopoly game. But the reason I mention it is not only because of the complexities of the advanced premium tax credit, but Douglas Eakin-Holtz, what actually used to head up the CBO, and he has, in my opinion, has a pretty good grasp on a lot of things, and budgetary as well as this overreaching law. And I thought it was worth at least sharing to maybe get a chuckle out of some of you. So today, pardon me, we're going to talk a little bit about where we left off last week on the PPACA fees. And again, these things I treat as an opportunity, an excuse, if you will, to go out and talk to your groups, talk to business owners that aren't your current clients, and ask them if they know about these fees, because the Patient-Centered Outcomes Research Institute, the PPACA fees, is something that every group really should be aware of. And again, we touched a little bit about it last week, but I just wanted to kind of go over some of the nuts and bolts, if you will. If you have a fully insured group, and most groups, let's face it, are fully insured, the PPACA fees are paid by the insurance carrier. So there's really nothing that the group or the employer has to do. But again, it is an excuse to go out and talk to these groups about this, because you can also talk to them about if they have anyone on COBRA. As we know, until 7/1, those people that are currently enrolled in COBRA can voluntarily waive that coverage and get coverage, subsidized or not, through the exchange. So it is, again, a good opportunity. But also, if that group is not fully insured, and they're self-insured, then those fees are paid by the employer. And here's a list of the fees. You see that it varies, and this is when the plan year is ending. So to the left, you'll see the plan ending date and the amount that has to be paid, and the due date. For this year, it looks like, at least for the most part, you're going to have a $1 fee, and for the self-funded groups, it is $1 per covered life. So if you have a family of 4, that's $4 for that one employee family that the employer would have to pay. If the group is fully insured and has a health reimbursement arrangement, then those HRA fees have to be paid by the employer. And there is a safe harbor where they make the assumption that it's 1 covered life per HRA participant, so it is a little bit less. There's another safe harbor that if your group is self-funded and has an HRA in place, then they don't have to pay the HRA fee. They only have to pay for the health plan per covered life. So I know it gets confusing, but these fees are due on July 31st, and there is a tax form, Form 720, that has to be submitted and with the fees. And again, a good excuse to touch base with your groups and talk to them about the fees as well as other things. There was, on to our next bullet point, many of you that have been on the federally facilitated marketplace in the northeastern territory of Pennsylvania NEPA was experiencing an issue where the subsidies would not show up. So I was prepared to tell you that there's an issue and let you know about it, but I just got notification this morning that the issues were resolved. This never really jeopardized the subsidy for those that enrolled because it did show up. It was just showing up after the fact as opposed to showing up when you were making application. So for those that were affected by that, it's fixed. You know, I'm not going to treat these webinars as advertisements for products, and I don't want it to become that because I do truly want to maintain, you know, this as an open forum or, you know, a round table that we can all learn. But I did and have been getting a lot of questions about, you know, employer groups and how they can maintain compliance and, you know, if there's any guides in order to help a group maintain their compliance, because let's face it, there are a lot of notices that have to go out from the employer. There are a lot more issues now facing employers. So I wanted to just briefly touch on a product that I think that you might be interested in. It seems like, for me, certainly a reputable company. I know that for a fact it's a reputable company, but it seems like an opportunity you know, again, to reach out to these groups and offer something that is very, very inexpensive, and also it's commission-based. So you can earn commission by talking to your clients about these and selling them these products. PrimePay has an HR advisory service. It's a live chat, live call with HR, human resource trained people, as well as endless resources on the web. And this benefit, I think, really is timely, and because it keeps the employers compliant, general benefits compliance such as COBRA, ERISA, HIPAA, you know, the PPACA compliance, as well as some of the other things, leaves of absence, you know, workers' comp, unlawful harassment, all of those things that in this litigious society that employers really now have to worry about on top of everything else. And, of course, the tools that you can get from online. In with the HR advisory services, you know, if you sold this to your clients as a standalone, it's $44 per month. And I think that buys a lot of, you know, comfort for the employers. But another option within this is their COBRA benefits and COBRA administration. And the COBRA administration for mini COBRA, for those groups of less than 20, it's a $50 setup fee, and it's $25 per month for these groups. So, you know, if you purchase or sell the COBRA benefit through PrimePay, then the HR advisory services are free. So I think that's a pretty good deal. And again, it's a commission-based product. If you become a broker concierge for PrimePay, it's a 5% commission on these products that you're selling. But more importantly, it kind of gets you off the hook of being their compliance team and allows you to offer a product that's, in my opinion, very affordable and very timely. So again, I will include this information in next week's newsletter, but I at least wanted to bring it up today so that you were aware that there is a product out there to help you keep your clients compliant. So I'm not sure how many of you with our next bullet point have heard, but the employee choice is now delayed until 2016 for Pennsylvania. Our state commissioner wrote to HHS actually just last week asking for a delay in Pennsylvania's adherence to employee choice for 2015. And the employee choice is, it sounds like a wonderful concept. I'm looking forward to when it is actually implemented. However, it's very hard for all of these carriers to coordinate all this billing, because essentially what it does is, on the shop plans, if you have a group of 5, essentially all of your employees could choose their own plan, not only their metal level plans that best suit their particular needs, but they can choose different carriers. So one employer group could have endless carriers. So to coordinate that billing amongst the different competing carriers is pretty difficult. So that employee choice option is delayed until 2016, and it's a good thing and it's a bad thing all in one fell swoop. That I wanted you to at least be aware of that. On to the next bullet point, advanced premium tax credit and tax filings. I actually sat in on an IRS HHS webinar yesterday, and yes, it was just riveting information, but in all honesty, it actually provided a great deal of answers to some of the questions that I have and all of you have. So I wanted to just kind of briefly touch on some of what I learned. If you have a client that is receiving an advanced premium tax credit through the federally facilitated marketplace, healthcare.gov will be sending out to every insured Form 1095A. And that 1095A is going to report on the months covered, the amount of the subsidy, and a few other items. Trying to find all my notes, and the amount of the premiums. So that form is going to be used to either you when you fill out your taxes. Let me see here. I'm sorry, technical difficulties. Once again, I apologize. Oh, good Lord. It's been one of those days, evidently. I lost my cursor. Anyway, so let me back up a little bit, and I apologize. So Form 1095A is going to be sent from healthcare.gov, and it's going to have various things that it reports on. When you or your clients receive that information, you would either use that when you file for your taxes, or you give it to your tax preparer, and they will in turn fill out Form 8962, and this 8962 is specific to the premium tax credits and the subsidies that they're receiving. So that form has not yet been created, but it will be created, of course, by filing season. And one thing that they also said, we've talked a little bit about the paybacks for the varying income ranges, the repayment caps, and they went through that as well. But if your clients on the FFM choose to take all of their subsidy and get the Get It Now feature, and that premium subsidy is applied, and it ends up being that it was more than was warranted, then there will be a payback based on the payback caps and the federal poverty level. But also, if they were due any additional, that will all be reconciled on the return. And any credit or debit will be reconciled out of any income tax return that your clients would receive. So anything received over what was warranted will be taken from any credit, tax return, tax refund that you would be given, and anything that you would have been due would be added to your income tax return. If you decide to take it later, your clients take it later, then again, that can reduce or increase any refund that is due. One thing interesting that they did say, and they gave a specific example, and all of this information is actually going to be in my newsletter today. I was able to grab the PowerPoint as well as the tax forms. And one thing they did say, which I thought was kind of interesting, is that, for instance, if you were due if your advance premium tax credit was $3,000 for the year, and you were only due to receive $2,000, that's $1,000 over what you were warranted or eligible to receive. So let's assume that you were under the 200% of the federal poverty level. The repayment cap on that is $300 for a single. So that leaves a balance of $700 that you can't pay back because of the payment recaps, but it was already given to you and applied. So that $700 does not go back to your client as taxable income. It really just kind of goes into, I guess, to feed that money tree up in Washington. But that $700 overage really, it's not accounted for. It doesn't have to be collected or claimed as income for taxes. So I thought that was pretty interesting too. On to the next bullet point, the FFM horror stories. I was asked to kind of start putting together a list of some of the horror stories that all of you have been experiencing and that we've been experiencing. And for anyone that is willing and able to share any of those stories, I would be greatly appreciative if you could just maybe shoot me an email and give me as much detail as possible, date that you went on to the FFM, the issue that you experienced, if you have your client's application ID, all of that information will help. And again, they don't seem to think that there's a problem still with the federally facilitated marketplace and some of the ways, that some of the issues that we've all experienced. So I think that it's going to be beneficial to all of us. And if you are willing to participate, again, just shoot me an email with some of those horror stories. Speaking of horror stories, the next bullet point, the FFM certification support sessions. I am planning on doing these again for this year, for 2015 selling season, and I'm going to start them on August 7th. They are supposed to be coming out in July, but I don't know if that's beginning of July or end of July. So they may be out well before August 7th, but that's the date that I chose to start the certification sessions. I'm going to run the majority of them here at URL, but I'm also going to have locations in the Philadelphia area, northeastern PA area, specifically Wilkes-Barre, and then, of course, in the Pittsburgh area as well. So, watch for those details. They'll be coming up soon. And let's see here. Let me see if I can get my cursor back. Here we go. At this point, I didn't have any submitted questions, so if you have any questions that you want to ask, you're just dying to ask, go ahead and type those in. And Bob says, is the PCORI fee quarterly? That is $1 or $2 quarterly or annually? It's $1 per covered life annually, Bob. It's not paid quarterly, it's paid annually, and they, for this year, are due July 31st. And Jay says 1095A is a worksheet for 8962 to be used on the taxes. That's correct. 1095A is the worksheet for everyone to use on the taxes. And also keep in mind that 1095A is generated from healthcare.gov. So I imagine, and it has to be sent by January 31st. So again, I imagine come mid-February that there will be a number of your clients that have not received this form, and the only way to get it is to contact the federally facilitated marketplace, unfortunately. So I imagine we'll have a lot of calls into the FFM. So that looks like all the questions that are typed in. If anyone has any other questions, I'll give you a few minutes to go ahead and type those in. Our next webinar is next Thursday, June 19th at 9:30. Every Thursday, again, that I hold these, so I'll continue to do that as long as there's a need. And next Thursday is that day. I also wanted to let you know, just maybe you want to mark your calendars. the Central Penn Business Journal annually has a healthcare symposium, and this year I am going to be one of the speakers. So I'm very honored by that, and hopefully all of you can come out and join me and see some friendly faces in the audience. It is Friday, July 25th, and I believe the event starts at 8:30 and runs till about 10:30, 11 o'clock. So if you're in the area or want to plan on being in the area at that time, I would appreciate your support and seeing friendly faces out there. Okay, no more questions have come in. So again, I truly appreciate everyone's participation in these weekly events. And if you have questions, you can always email me or call me directly outside of this webinar format. And as always, I appreciate your support and I appreciate your business. So have a great day. Be safe tomorrow on the 13th and have a great weekend. Bye-bye.